Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Hey traders, Stacey Burke from Stacey Burke Trading. Today, continuing our discussion, and we're going to be talking about, again, the 3 types of opportunities that can present. Today we had some absolutely fantastic day 3 opportunities on gold, and we're going to just review the 3 types of opportunities. Now, regards to the day count, we've done several videos on the day count and understanding the difference between the 3 types of setups. We have Monday to Friday opportunities that start with an opening range and an initial balance between Monday, Tuesday, Wednesday, Thursday, Friday. We can get 2 3-day cycles within there that can offer us 3 session setups within that template. But that can also be part of a larger 3-day setup, as we saw in gold today, Friday, Monday, Tuesday. So we have a new template, a new week, but we also have a 3-day setup that culminated in a 3-session parabolic in the US session. And then we can also look at day 3 longs, day 3 shorts for reversal opportunities. And this will sometimes coincide with a first red day and a first green day. And we're going to clarify some things with regards to that, because we're getting traders asking about first red days and they're already way down low, or first green days and they're already way up high. And that is not the setup. So we're going to clarify that. And of course, the inside day, false breaks, trend trades, and low-hanging fruit. And sometimes the 3 of these can all coincide together. So let's take a look. Now, the first thing I want you to do is just to think about what you're trying to accomplish if you're looking for a best trade candidate. If we want to, for example, we want to sell something in the market, we can say this is Friday. The market's come down and it just looks like a ripe sell. We want to sell it because it's trending down. And so we sell it only to find out that the market reverses on our Monday and gives us a first green day. And we go, well, hold on, the trend was down. The market then proceeds to auction up and possibly trade down in the Europe-London window and give a buy setup for a first green day trade in the long direction. And we could get a day 3 that ends up blowing off in the US session on major red news at the high of the week, maybe taking out the high of Friday, and not necessarily closing as a first red day, but almost like a first red day. And then we can have a 3-session setup on the Thursday for a vertical move on the Friday that blows off maybe on major red news, or maybe no news at all. Maybe we have a inside day, a break in structure, whatever that may be. But remember, if we're looking to sell, we want to be looking for some really basic setups. If we're selling in a broken down market, we want to sell the pump up for the dump. Simple as that. If we're on the front side of a day 1, day 2, and we're trying to sell it and look for the dump, but we're on the front side of the move, we're trying to sell it down into the dump, we might be better off looking for the Asia or London parabolic on day 3 or day 2. Now, we might not even get a first red day until Thursday. We might get an inside day, but then we're on the backside perhaps, and we might get a 3-session setup again for a parabolic move on the backside, front side, backside. Now, just coming back to the Monday to Friday cycle, we can have a Monday, Tuesday, Wednesday, Wednesday, Thursday, Friday. Day 1, day 3. Day 3 becomes our new day 1. day 2, day 3. Now, there may be nothing here at all. It may just be a market that's trading all over, and traders go, oh, it's just a mess, and they miss the day 3 on Free Cash Friday at the high of the week in the trading range. Might start in Asia, might blow off in London and be low-hanging fruit in the US, or it might dump down on Friday into Monday. Tuesday begins the setup for a parabolic move on Wednesday that drops back down on Thursday and continues on Friday. Day 3 becomes our day 1 again, day 2, and day 3. That's the Monday to Friday template. However, we can get a market that breaks out on a Friday and we get a false break low of the week reversal, as we saw on gold. And then we see a market that is an inside day. The high of the day was up top. And the market breaks out of the inside day before pulling back and going vertical. Not only through the low of the week, but it keeps going for a measured move. That's a 3-day setup. 1, 2, 3. Now, here's the interesting part. Monday's our opening range. As we talked about in the playbook, opening range and initial balance. We can still get a possible day 1, day 2, maybe a day 3 on Friday. So Wednesday's our day 3 in the Monday to Friday template. Or we might just get a market that gives a first green day and goes parabolic on Friday. No idea. Have no idea until I get there. But I do know this. This was a 3-day setup on gold. Day 1, day 2, day 3. But we also have now a new week, and we have an opening range breakout. An opening range breakout. There's a gap on breakout traders. We have a market that's traded down. It's day 3 tomorrow. Might not do anything. It might pump up and roll over again in the US or in London. I have no idea what it will do. We could get a first green day on Thursday and a reversal on Friday. We have no major red news on Wednesday. But again, this is why there are continuous opportunities. We have 3-day setups. We have 3-day setups and we have 3-session setups. And we've talked about those ad nauseum: peak formation high, peak formation low, consolidation, parabolic opportunity in a session. We can have 3-hour setups: 1 push, 2 push, 3rd-hour reversal. We saw that on gold. We talk about this repeatedly. So we have 3-day setups, 3-session setups, and we have day 3 breakouts. So day 3 breakouts can often coincide with sometimes even a payrolls week. We can get day 1 breakouts, day 2 breakouts, day 3 breakouts, and then even a day 4 before it reverses as a first red day, first green day, and a day 5 Free Cash Friday for a parabolic blow off from maybe even high of the week. We could have a day 1 that starts down here and we get a market that just keeps breaking out, breaks down, and we get the pump and dump. And in fact, it might even be the other way. They might dump it down day 1, day 2, day 3 for the dump and pump. Really mastering your setups. It's a skill set. It's a skill set. And being able to execute and know exactly what you're doing in live time is a skill set. It's like a professional sport. You have to hone your craft. You have to become a master craftsman. And you might only pick 2 or 3 setups that you trade. It still comes back to understanding these simple setups, because they are simple. There's a very simple model. And if you're getting in on the front side or you're getting caught on the wrong side, again, coming back to understanding timing, 3-hour cycles, major red news. We can go through all of these different types of scenarios. But if it doesn't look simple or you don't recognize it, come back to the simple concept. The simple concept. There's 2 types of trades: pump and a dump, or a dump and a pump. And this can be over 3 hours. This can be over 3 days. This can be over 3 days between Monday, Tuesday, Wednesday, or Monday, Thursday. We can have a 5-day setup, Monday, Tuesday, Wednesday. Again, if we get a day 1, a day 2, and a day 3 that doesn't go anywhere and then continues Thursday, Friday, guess what day 3 is? That is a reset. A reset is when we are in our template and that market doesn't give us a day 3 setup or a day 3 opportunity, and it continues into a new 3-day cycle. When a market has pumped up and broken down here, this is not a reset, and it is not a first red day. We want to see the first red day up here. Pump and dump. When it's down here, we can still possibly get a sell high signal, but that's a continuation trade. First red day is we get the pump, and then we get a market that is taken a peak formation and closed underneath of the open. That is a first red day because that's where we have asymmetrical risk reward for a large move down. If a market dumps down and we get a first green day and that market breaks out first and rolls over, traders are still looking for the first green day trade, and they've missed the trade on the false break of the daily high. Highs and lows of days are critical, and all this is a continuation. This is the false break on the inside day or on the high of a day for a short trade back down to the low of the week. An ideal first red day will have a pump. It could be an inside bar, or it could be a pump day and a day that takes out the high of the week or the high of the day for a first red day opportunity the following day. Same thing goes for a first green day. We can have a market that gives us a first green day, and traders will again look to buy it. They buy that and the market breaks out and rolls over, and they go, well, the first green day didn't work. But ideally what we want to see is a dump day and some maybe trap volume beneath the low of a day, first green day trade, market that trades back into the low for a parabolic opportunity back up to the high of the week, the high of where that move began. Same thing with the pump and dump on the first red day. Now let's take a look at a couple of specific examples. Now we're going to look at the gold as just one example, and I'm using the hourly chart. You can use whatever time frame you want. Hourly is easy because we're looking at the day in terms of a signal day. Yesterday's close, hindsight pays. What type of day was yesterday? We have our template as the week unfolds. Regardless, if you can't tell or there's no signal day, we go back to the basics. Monday's day 1. Now, day 1 in what? Day 1 in a Monday to Friday template. It's as simple as that. Now, if we start on Friday, we don't have any trap volume down low, but we have a breakout on Friday down low, which is our low of the week. So now we have a possible 3-day setup into our new Friday, Monday, Tuesday. But Mondays are day 1 in a new weekly template. And it's an inside day. Monday's day 1 in our new template. It's an inside day, and it's a first green day. So first green day, thesis would be possibly, if we back this chart up, that maybe we're going to target the high of Friday because that's where the dump began. Dump, first green day, maybe pump. Maybe we're going to get a pump or a Monday, Tuesday, Wednesday pump back up to the high of our Friday. Inside day. So we come to our Tuesday. Monday, Tuesday forms our opening range for the week, the new week. So there's our new high and low for the week. Day 1. By the time Tuesday has printed, we will have an initial balance. Tuesday closes as a breakout day. So we have day 1 longs in the market. Remember, on Monday, we did not break any levels of Friday's high or low. That is an inside day. We've now triggered inside day traders at the beginning, just prior to our US window. We've broken out of the high of the day. We've triggered inside day traders. This is not a false break. Why? Because we've traded back into the low and continued higher and closed as a breakout day. We're out of balance. Remember, we've spoke about imbalance, out of balance markets. If you're not sure what they are, go to the channel and Google that. Dalton Market Profile. day one, inside day. We have inside bar traders long in the market, and we have day one breakouts in the market. Day one, day two, we had no major red news on Monday or Tuesday, but we did have major red news scheduled for Wednesday's U.S. session. So we have day one, day two, and on day three, the market goes vertical and breaks the high of Tuesday. Now remember, we had longs in the market. We have an opening range breakout. Go study the playbook. We talk about opening range breakouts. Day one, breakouts in the market. Breakout pullback, only three things that markets do. It goes vertical. But it closes as a first red day. First red day. So again, with major red news, that was not an opportunity that could be traded long, because the market took 1 hour up and came right back down. We already showed the trade on the 5-minute chart of second hour opened up on an engulfment. The high of the day was already locked in, 3 levels of rise. 75 was where that market turned around from. We have a first red day. We have day two longs in the market. Day two longs in the market, but obviously they've been stopped out. Day one breakouts, day two breakouts, first red day, day one, day two, day three. Okay? 3-day cycle, Monday to Friday. If you see this type of setup, I'm already thinking Wednesday's day one, Thursday's day two, Friday maybe free cash Friday. There's a free cash Wednesday. And we also have our low of the week, and we have the low of Friday as a potential target. Why? Because I'm thinking pump and dump. Why am I thinking pump and dump? Because we are pumping up and we got a first red day. So I think pump and dump. Now, the high of Tuesday is potentially an area. And guess what? That's at 75. That's 3 levels of rise in a 100 pip box where we might have a potential selling opportunity. The next day, our first red day, gave a sell high in Asia that collapsed down and took out the low of the U.S. session, or went down into the low of the U.S. session. We talked about, again, heading into major red news, marking off the high and low of the day. This was a third hour, 10 a.m. U.S. time for major red news. PPI on the calendar at 8:30 New York time. And that market traded back up through the high of the day into our 75 level. And we trigger the high of the day breakouts. Day one, day two, day three breakouts in the market. After first red day is a sell high opportunity. If indeed it presents high of day, high of session. We got that. Again, look at the timings. 7 to 8 a.m. 8 to 9 a.m. Major red news is over. New hour starts straight down on our first red day on day three breakouts. So coming back to understanding, we can have 3-day setups. We can have 3 session setups. And we can have day three breakout setups. Day one, day two, day three. Day one at the high of our week now. Day two coming down. Day three blows off in the direction of the trend. We have major red news at 10 a.m. We talked about this. I'm going to review it again because the concept needs to be understood, because you can have 3-day setups. You can have Monday to Friday templates, and you can have day three breakouts in the market, which will bring us to today's trades. So we had peak formation high, peak formation low in London for the short squeeze. We already talked about the 3 pushes down, 3 levels of drop, 150 pip box, and no major red news until 10 a.m. We had 2 full hours before major red news for this market to do a short squeeze back up to the high of the day. We have day one shorts in the market. The market trades up for 2 hours. 1, 2, new hour opens on major red news, 10 a.m. for the vertical pullback into breakout traders at the low of the week on our Friday. That market had a peak formation low with trap volume, and we started our day count heading into the new week for a potential 3-day cycle. Why? Because we had failed breakout at the low of the week. Monday, Tuesday, Wednesday, Thursday, Friday did not take out the overall low, but we had trap volume starting our new week. So we start again. Monday's our day 1, but we have a possible 3-day cycle. Day 1. Day 2 is an inside day. 1 push, 2 push, 3 pushes up, and a 4th push that engulfs at 75. Now somebody asked me, why did I draw my consolidations on just the US session? That's because when I head into the new day and I'm looking for a 3-session setup, that is where the consolidation is. The consolidation is right here. We had peak formation above 75. We had a low of the day. They put in at 50 for a vertical 3-session parabolic for a 25 pip scalp that collapsed at the end of the Asian session. Now let's go back to our signal days. We failed breakout day 1. We have an inside day on Monday. An inside day that went up 3 levels of rise. 25, 25, 25. We had volume trapped up high from the Asian session. We have a consolidation that broke out in London. This is a breakout. This is not a false break. Do you understand what the difference is? Let's take a look at a false break. This is a false break. It breaks out and immediately reverses. I'll put this in proper text. Immediately reverses to the other side of the day. They trigger breakouts and immediately go to the other side. Think about this. If other time frame traders are in the market up here and it reverses, where are they going? Where is the money? If that's a false break, where are they going? That is not a false break. That is a breakout. So we have a breakout, and now we know there are 3 things that markets do. They stay in a trading range from high to low or low to high, or they break out, they pull back, and they continue, or they break out, they fail, and they reverse. That is the only 3 things that markets do. So, coming back to our new week and our new template, we have a day 1. And as several traders, I mentioned this earlier, we have an inside day on our Monday and a first green day. Okay? First green day. Put this in capitals. We have an inside day and a first green day. Except that when I come to the US session on day 3 and it's a 3-session setup and we have major red news at 8:30, we've already broken out. We've already broken out and not taken out the low of Friday or the overall low from the previous week. So we have a market that goes up on major red news. This is a 1-hour chart. We'll zoom this down in a second. That is a pump up. It's a pump up. After 1 hour, the market has not gone any higher. That is not momentum. That is not a momentum catalyst opportunity continuation. That is a first bounce trade. If it had momentum, it would keep going. And gold will keep going when there's momentum behind it. This is a 5-minute chart. We have a 100 pip box. We've gone up 3 levels of rise, 150 pips. That is 3 levels of 50. I know there are traders that said the other day a market did 3 levels of 25, and you said, oh, it's supposed to be 50. It's different on every instrument. 3 levels of 50, level 3, and then what does it do? It breaks down. This is a 5-minute chart. As I mentioned earlier, where was the buy set up here? Where? Okay, we're not talking about first bounce. We're talking about the New York Open. If you're buying this, okay, I want you to look at this. Where are the peak formations? Where are the peak formations? Are they down or are they up? 1 hour, 2 hours traps volume. Where? Above 75. Breaks down and goes sideways. This 5-minute candle engulfment right here. I'm going to highlight this. So important to understand this. This little engulfment 2-bar pattern is the last 5 minutes of the second hour. This market is about to accelerate and collapse. That is the beginning of the third hour at the close of that candle. Okay? Now, coming back to looking at our charts, let's go to the 15-minute just to simplify the big picture. This is a rectangle. Go back and look. We have 2 levels of rise, 200 pips from the bottom to the top. If this market collapses, is it possible it could do 3 levels of drop? 100 pops up, 200, 300 pips of drop, 3 levels of drop. Let's go back and look at this. It's day 3. Day 3, Friday was day 1. Why? Because we had a trapped failed breakout at the low of the week. Where did they go? They traded up into the peak formation. Did they take it out? No, they did not. It's a first green day and an inside day. Where did they go on day 3 where we can possibly see a 3-session parabolic? We got that in the London session. A 3-session parabolic. US, Asia, London, blow off. Pump and dump on the news. First hour, second hour traps volume, third hour collapses. 1, 2, 3. Now we're into our new week. This space is almost a dead giveaway. That they were going to just collapse straight through. As soon as it broke down in the third hour, this is a dead giveaway. There's nothing here to stop this. This is space. They've lifted this up from the previous Friday. Pump, day 1, day 2, day 3, first red day, dump. We're on the backside. If we put, this is a 1-hour chart again. Even if we put a moving average on here, we're on the backside on a 3-day setup. Front side, backside. Front side, backside. Front side, backside. 5-minute chart. Front side, backside. Major red news. Third hour trade. Pump, dump. Pump, dump. Pump, dump. Al Brooks talks about range expansion H1. There's a full range expansion as a possible profit target. The high and low of the session. Third hour trade. A range expansion for 100% expansion of the high low on day 3 for a 3-session parabolic in a 3-day setup. Now coming back and looking at our Monday to Friday template, tomorrow's day 3. Now we could have a pullback up to this level, day 3, we could have an inside bar and we could still go down again. No idea, but tomorrow's day 3. Today we're started already in Asia for day 3, but we have day 1, day 2, and somebody asked, is this first red day? Now, first red day is up here, pump and dump. First red day down here is, unless they come back Wednesday, Thursday, Friday, this is a selling area perhaps, but we're not looking for a first red day down low. First red day is when we get the pump up and the reversal for the potential backside trade now. We might get a first green day. They might break the low of this and reverse and go Wednesday, Thursday, Friday for a parabolic back up into this breakout level or even further. We could have a 3-day setup into a Friday blow-off. There's no major red news tonight or on Wednesday morning. We have no major red news in the U.S. session on Wednesday. We have unemployment claims on Thursday. And we have Fed on 11 a.m. on Friday. So again, this is a 11 a.m. That's possibly 3 hours. We could get a setup in that first few hours again on gold itself or on any other instrument. But we do have this market possibly setting up for some kind of explosive move, maybe nothing at all. But we're the day 3 now of Wednesday in the Monday to Friday template. We also have, for the new week, day 1 shorts in the market. Coming back to where the move began, day 1, day 2, day 3 shorts in the market. But there is no evidence as of yet or any signal day of a reversal. Now, I know some traders are going to get confused and frustrated by this, but how's this? Take this and think about it. What's worse, losing all your money trying to trade stuff or having an actual thesis and setup and understanding the templates for scalable parabolic opportunities? Because you might find this confusing, but if you can't understand the setups, no matter what you do, it'll end up the same way. So master the setups. They're there and they're continuous. This is why there are continuous opportunities, because there are continuously evolving 3-day cycles, 3-day setups, 3-day templates, 3-session setups, 3-hour setups. The power of 3 levels over and over and over again. We can look at the euro. So we had Friday as a low. We'll put this on the 1-hour chart. Take a look. Friday was the low heading into our new week. Monday's our opening range. That's the high and low for the new week. We get a breakout that reverses right at the beginning of the U.S. session. We had major red news on the calendar. Coming back to our understanding about time rotation, we get a market that reverses. This is a 15-minute chart on an engulfment and closes at the third hour, right at the beginning of the third hour, to continue that move back down. Again, not suggesting that was a best trade setup, but we're currently now on the backside again, heading into our new day. How many days is this? From Friday to Tuesday. Day 1, day 2, day 3. The market has risen 50 pips. It engulfed, triggered the high of the inside day before engulfing and breaking back down. Lower lows, lower highs. No idea what this market will do, but an example of a 3-day setup if traders were looking to trade the euro. Similar on the British pound. We had a Friday that broke out of Thursday's low and reversed on Monday, giving a first green day. Now again, an example of where a market closes as a first green day right near the high of the day. That is not the type of opportunity we want to see. We want to see something that consolidates sideways. As I went over last week, we showed the consolidation into the U.S. session for the parabolic move the next day. Now, day 1, day 2, day 3. We have a new month, a new week, new template. Monday sets the high and low. The market goes vertical into higher level longs on Tuesday and gives a low of day, low of session buying opportunity at the London Open for a 50 pip move back up to the high of the day. Okay, so let's look at timings. We talk about if a market dumps down into the open, so some traders would have shorted this for 25, first hour, dumps down before the session begins. So we have our high of the day. It begins dumping before the session begins. And then we get an engulfment at 75, 50 pips below the high of the day. The second hour opens right here on this candle. So again, we'll just, this is a 5-minute chart, but when you understand the levels and the timings and the setup, when the equity hour opens for London, we already have an entry opportunity on the smaller time frame. There are traders that say, I don't like the 1-minute chart. It's not about the 1-minute chart. It's about the levels and the setup. The market's already pulled back inside underneath the low. It's pulled it down 50 pips, first hour. Pulls back up higher highs, higher lows, dump and pump into the London Open for 50 pips back up to the high of the day. Beginning of a new hour. So now we have a market that has traded inside of Friday's high and low. Day 1, day 2, in our new weekly template, we have a trading range. No idea what it's going to do, but there was an opportunity in London for a parabolic setup. Back up to the high of the day, dump and pump. Just get rid of this. And again, 3 levels of rise, 25, 25, 25. So these things will repeat over and over again. If you're going to trade London, maybe look at the Swiss franc, the euro, the British pound, maybe a couple of crosses to see if one of them set up. If you're going to trade Asia, maybe US yen, pound yen, euro yen, Aussie yen, maybe quick glance at the Aussie dollar, maybe front side, back side. Maybe it's going to be a day 3 parabolic on the Aussie dollar. We have news this week on the Aussie dollar, don't know. If there's major red news in the US, we talked about the first hour. We've done several videos on this. First hour, major red news, can put in a peak formation. Second hour, trades inside of that. Third hour trade. So understanding timing, forget even looking, if you didn't even look at anything in terms of a smaller time frame, but you understood time and you had a setup. So even just coming back to front side, back side, we can look at our 5-minute chart, whatever, but even just understanding that 1 hour, once that hour closed as an inside bar, okay, the thesis was already in place. It's not about looking for a perfect little zigzag bar on the chart. I'm getting in. I already knew that. I was getting in. It's a 3rd hour trade. Right at the end of the hour, right here, right at the end of the hour, 1 minute before the hour closes, the trade was already short. 1, 2, 3. Peak formations are up. Understand the clock. People go, oh, it looks like chicken wire and everything. That's because I'm not looking at the bars. I already knew I was getting in. I'm getting in when the new hour starts. This confirms it. Get in. Where's my stop? It's here. 20 pips max. Why? Because this should break down. Why? Because we have traders in the money. Come back to look at who's in the money. Who is in the money? The first bounce guy. We'll take a quick look at that. So, 7 minutes. Okay, we have a pin high. That's a snowplow that wipes all the lower level shorts out. So coming back and just looking at this chart. They dump it down before the session begins, getting people to short this into the low of the day. Okay, we have a breakout of the Asian session low. Everything is boxes and rectangles. Breakout pullback, continuation on day 3. 7 minutes in, after they pin the high, they pin the low without taking out the low of the week. 7 minutes now. I've said this in several videos. 7 minutes down and reversal. Guess what that is on a 15-minute chart? If this market explodes, which it did, it's a short squeeze, okay? Peak formation high, peak formation low, consolidation sideways, first bounce. Several traders hit this. I'm not a miracle worker. This is an easy setup and an obvious setup on the bigger picture, but I want to reinforce that 7 minutes into this, if this market goes vertical, guess what this 15-minute bar is going to look like? This is going to become a massive pin hammer on a 15-minute chart. A pin hammer. Now, this pin hammer opens here and closes up here. The second 15-minute candle immediately triggers the high of the candle before dropping down. This candle, this is a 15-minute chart. This candle right here is the close of this candle is the beginning of the 3rd hour. Look where the first 15 minutes closes. Remember what I said. If you bought up here, anywhere above this level, anywhere above here, what are you doing? You are buying high. Okay, if this trade had momentum, so come back to 3 levels of rise. 1, 2, 3. If it had momentum, okay, breakout, pullback. If it had momentum, guess what it would have done? Boom, straight up. It would not have slowed down. They would have blown through the high of the day. 1 hour later, we're still below that level. We are below the 100 pip box. The last 15 minutes pins up into the 100 pip box. The new hour is about to start. Guess where this market is going? What did they do? They got everybody chasing the move up top on a day 3. The news is the stop hunt up. If you bought above here, chasing this without taking any money or getting out of the trade, even if you got in anywhere after this, you were still up 50, maybe 75 pips. At what point did you not want to lock in any money? The high bulls engulfed. They've broken down below the 100 pip box. Do you notice what all these are? These are all pump ups into the peak formation and dumps. Consolidation. Peak formation high, peak formation low. So we'll just, I don't care if it's a 1 minute or a 1 hour chart, it's all the same. Peak formation high, higher, breaking down, pump, 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 consolidation, vertical move. So the process is the same. The templates are the same. Day 1, day 2, day 3. We can have 3-day templates, as we showed from the previous week, that are inside of a range. Monday, Tuesday, Wednesday. We can have day 3 breakouts that will be part of a larger template, first red day. We can have 3-session setups. So we'll talk about that just in closing. Trader's question was, why did you identify the U.S. session as your peak formations when the low of the day was down lower? Again, when I head into a new session, okay, every session, unless it's inside, is going to have a peak formation. There's my consolidation now. Heading into the close. The close of the day is right here. Let's just draw this. This is the close. So I'm in between 50 and 75 at the close of the day, and I'm inside. That's 3 levels. We have a peak formation high, a peak formation low. That's a consolidation. We head into the new day, and they trade down into the consolidation low, and we get a 3-push pattern for a parabolic reversal. On a smaller time frame, we had an entry just above 50 for a nice easy 25 pips. Traders say, oh, that low looks good in hindsight. I'm going to keep repeating the same things. Guess what time this pin hammer is? Right at the end of the hour. Guess when the trade was? 2nd hour. 1 hour down, working the low, engulfment, pin hammer for an explosive parabolic move of 25 easy pips, easy money. New hour begins, we get an engulfment, and that's the stop hunt for 25 down into traders who were long, just under 25. But again, 3 pushes, peak formation, locking in the high, trap volume up top, and a new hour begins right here on this engulfment candle for a vertical explosive move into longs from that second hour. So the same things will happen again and again and again. It is what it is. Day 1, day 2, day 3 on the DJ30. Again, Friday's low. I'll just put in Monday here. Not quite as easy chasing a move down low, but the market was already blowing off after news on the open. We'll just go to the 5-minute chart. Peak formations are up. It's day 3. Which way are the peak formations? Up. What does that tell us? Monday's U.S. session. Pump, pump, pump. Lower low, peak formation, lower high. Heading into our U.S. window. Major red news. New York Open. 15 minutes after the New York Open. We have a continuation. This is a 5-minute chart. We have a continuation opportunity above the quarter level. Right at just prior to the end of the second hour, market pins up into that trade. We have again as a large candle, which is why once you have your thesis in place, you'll notice 1, 2 inside bar. If we go to our smaller time frame, they take the market lower right at the New York Open before exploding vertically. Remember, our thesis is we're in a broken down market. We are at the high of the day. Peak formation, pump and dump. We're in our last 15 minutes now. The new 15-minute bar starts where we have an engulfment, double zeros for the collapse down. Now, if you didn't take that, we redraw our consolidation. A new hour begins. They pump it up and dump. 1 bar stop for 75 pip move down through the low of the day. There are only 2 types of trades. You can argue for your own limitations, or you can master your craft. You can master the 3-day setups, the 3 session setups, the 3 level setups, the 3-hour setups, day 3 breakout setups. They will continue to happen over and over again. Some traders will never ever execute them. They'll be chasing stuff. They've got indicators all over their charts. They're using all these other kind of analysis. They want to tell me where the market's going to go. That's great. It may end up there, but how are you going to trade it? What are you going to do in the session that you're trading? I'm targeting best trade setups. There's 2 types, pumps and dumps, dumps and pumps. Now, we've just gone through this. The playbook is very specific. These videos are very specific to the time, to the hour, to the entry, to the levels. Keep it simple. Understand which trades are scalable. This is not an accident. This is not luck. This is not coincidence. It's going to happen again and again and again. Keep getting better. For those of you who are moving in a direction of constant progress, congratulations, because you have nailed some seriously monster trades today. There are going to continue. For the others who are struggling, step back, understand the bigger picture, understand the setups. Become a master of your craft. Mastery, mastery, mastery. 1% better every single day. Keep it simple. And may the markets go with you.